Good morning, everyone. Welcome. Thank you for joining us this morning. My name is Isabelle Wheeler, and on behalf of FIBA, I would like to welcome you to today's FIBA webinar entitled Panama Papers. What does this mean for the industry? As we get ready to begin our webcast today, we would like to invite you to attend the upcoming 2016 FIBA Wealth Management Forum on May 5th and 6th at the Ritz-Carlton in Coconut Grove. The theme for this year's forum is Transformation and Opportunities, the Consolidation Conundrum. For more information, please visit www.fibawealthmanagement.com. So, for our presentation today, we're going to discuss the Panama Papers. We have two excellent panelists with us this morning. The first one is Kathy Keneally, who is a partner at DLA Piper and serves as the chair of civil and criminal tax litigation in the firm's global tax group. Before joining DLA Piper, Kathy served as the Assistant Attorney General for the Tax Division of the U.S. Department of Justice, where she was the top tax prosecutor for the United States. Also joining us is Daniel Gutierrez. Daniel Gutierrez of Ocean Bank has been a key part of Ocean Bank's BSA management team, which enabled the bank to get off the deferred prosecution agreement and consent order, as well as enhancing and strengthening the BSA program. Prior to his employment at Ocean Bank, and since 2001, Mr. Gutierrez has worked at other large financial institutions in Miami, including Standard Chartered Bank, American Express Bank International, Banco de Crédito Inversiones, and the International Bank of Miami, in various BSA, AML, OFAC capacities, including managerial and supervisory positions. Mr. Gutierrez is currently the chair for the BSA AML Committee for FIBA and is a certified professional in AML, FIBA/Florida International University certification, and a certified anti-money laundering specialist, CAMPS. So welcome to the two of you. I'd like to kick this off with a question to Kathy. Kathy, what exactly are the Panama Papers, and what impact might this have on the government's enforcement efforts over the last several years?
Thank you. Thank you to FIBA for inviting me. I'm happy to be here. I think what Panama Papers are has been pretty widely reported. There's an apparent leak of over 11 million documents affecting hundreds of thousands of account holders, entities, from a prominent law firm involved in what many people, I think, in some instances thought was routine and good legal advice. But the publicity from it is that there are apparently at least secrecy concerns driving some of these structures, and maybe other activities ranging from tax evasion to some concerns about terrorism activities through these structures. And if nothing else, there is the reputational impact of all of that coming out. And I'm very appreciative, and I got here a little early this morning, was able to talk to some people and learned a little bit more about the extent of sort of shock of this by the scope of the disclosure and the very broad-ranging public disclosure of specific individuals and specific entities. But I have to say, in my prior capacity, head of the tax division for the Department of Justice, we were focused, and the Department of Justice continues to be focused, has been for almost a decade now, on the use of offshore bank accounts and offshore structures to evade U.S. taxes. And my original reaction when I heard this news was, this is just more of what's been coming out for a long time. There's some things I want to say up front because I think it gets lost in the noise of all the publicity over this and the press reaction to this. There are perfectly sound reasons for setting up structures. There are perfectly sound reasons for anyone to be doing their banking outside their home country. There are sound reasons, and I always try to bring this up in meetings within the government. There are sound reasons for bank secrecy. There's reasons why this is involved and why countries have this. But there has been a concern in the United States and increasingly in other countries about the use of these accounts and these types of structures to conceal beneficial owners and to either evade taxes or hide some other illegal activity that's going on. And in my practice, I mean, I've been at this longer than I like to think. And I remember making voluntary disclosures of offshore bank accounts 25 years ago. I mean, it's always been an issue. It's always been something that was out there, but you had this real sea change that began with UBS. Sorry.
I'm getting text. You need to speak up.
I need to speak up. Okay, so for those of you who missed anything I've said previously, I said there may be valid reasons for all of this, but it's a shocking breach of confidentiality. I think. Let me know too if we get any more messages like that. But if you go back and you look at the beginning of this era of enforcement, at least on the U.S. tax side, it actually starts with whistleblowers and disclosures. You had records that came from Liechtenstein. You had whistleblower activity in Switzerland, and you have the beginning of all of that happening there. And yes, still. And the U.S. for the last, since 2008, has had this very much expanding investigation into these accounts. And and I'm sure most of you know about the Offshore Voluntary Disclosure Program that started in 2009, and the various iterations that we've had of those programs. There has been a focus, and it has been a global focus, on account holders and also on banks, bankers, law firms, financial advisory services, and other what the government would call facilitators of this activity. And I think a lot of the public focus of that has been Switzerland. There are a large number of people who have been indicted for these activities, and it's an ever-expanding thing. One thing I think part of my reaction is to where's the news in this for law enforcement. One thing I wanted to talk about a little bit that we talked about before the program in. Government's investigations here began in Switzerland, really focused on Switzerland. The consequence of that was that a lot of enforcement resources were being directed there, and Switzerland got a little weary of that. And through a series of negotiations and discussions with the Swiss, during my tenure in August of 2013, we announced a program that's become known as the Swiss Bank Program that invited the Swiss banks that were not already under investigation to come forward and make a disclosure of what their activities were. Now, there was a there was a challenge in dealing with Switzerland because of their bank secrecy laws and because of specific quirks in the U.S.-Swiss treaty from a law enforcement point of view. And what the Swiss bank program did was say to the banks, tell us everything about your activities short of the account holder names. Describe what those accounts look like with sufficient detail that valid treaty requests could be made under the Swiss treaty, which has a fraud and the like standard, which is a higher standard than most treaties. And that's how the U.S. government will get the account holder names. I think that what may have been overlooked in this is that from the U.S. law enforcement point of view, yes, everybody wanted the account holder names, but really what everybody wanted was to motivate the account holders into compliance, to have that interim effect that the Swiss were finally going to turn over the names, and so the account holders would come into voluntary compliance. What the banks were asked to do to come into compliance was to disclose where did the money come from and where did the money go. So if the money was coming through Panamanian structures, if the money was coming through Liechtenstein structures, that whole structure was required to be disclosed by the Swiss banks. And if the money, and this is something that we absolutely knew when we put the program out there, we knew that when the first of the Swiss banks began to be investigated, that banks in other parts of the world said, we are still haven, we still have bank secrecy, we'll never fold the way the Swiss might fold, and that the money left Switzerland. It either went into smaller cantonal banks or regional banks in Switzerland that did not have a U.S. presence, or it went to other countries. And so the Swiss banks were asked to say, where did the money go when it left? And part of my reaction to the, and just one thing I want to say here, when we announced that program, we expected a handful of banks to come forward. As of about a month ago, the department announced that 80 Swiss banks came forward and provided this information. And it's on their website. You can see what the banks are, and it's a rather remarkable range of small banks and global banks. But this means that the United States, the IRS, and the Department of Justice already has a tremendous amount of information from the things that touched Switzerland. And a lot of this touched Switzerland. I mean, when you look at what's coming out publicly, the structures may have been Panamanian, the advice may have been coming from a Panamanian law firm, but a lot of this touched Switzerland. So from a law enforcement point of view, I think that the primary message is everyone needs to be aware of what the government already knows and what's been known and what they're developing already. Because if I were going to predict, I would say that the first thing that they will do is look to the investigations that are already ongoing and look to what's in this database to figure out how it builds on what they're already doing. And then they will look to this database to see what it is that structurally they can learn about how money moves and may move in illegal ways and in ways the government wants to address. But to some degree, I thought this was, news we'd already heard. Tammy is reminding me, I have
a great slide.
I have these two slides. And I will tell you, these are not my slides. I was in private practice before I was in the government. And these are two slides that an IRS representative used in a panel program that I was doing on high wealth audits, which is another issue and another way I think this information will be used. There's been a long-standing practice by the IRS to do very focused IRS examinations on the civil side of high wealth individuals and what their global footprint is. And they're going to look at this. But just this way. But these are the two slides that he showed. But IRS as it once was. And for those of you who might not have visual, what you will see is a man wrestling with a very large fish. And then this is how the IRS sees it today in terms of their ability to get information. Then it's just, and if, again, for those of you who don't have the visual, it's a net scooping up lots and lots of fish. The ability right now of the United States to get information about offshore structures and bank accounts and all of this activity is almost an embarrassment of riches. And there's going to have to be, I talked about this, we'll discuss in this panel, there's going to have to be some triage as to what they're going to do with the information coming from the Panama Papers, because there's a lot of information there. But they've been mining this data for years. I mean, you have all of the people who have come through the voluntary disclosure program, and there is an enormous amount of disclosure there, and there is a database there that the government can look to. So, one of the first things they can do is go to that voluntary disclosure program and figure out if any of the people who are going to come in have said anything about this law firm, and then they can go back and find more information about this firm and build from there. There is, as I am sure everybody knows, FATCA. And I'm sure that picture with all the fish, it's a FATCA picture. It's a repurposed picture because the first person I saw use it used it in terms of the concept of high wealth audits. But it is a FATCA concept too. I mean, there's a tremendous amount of information that's coming in. There are whistleblowers. This may be of a magnitude and a public impact that's different from what we've seen. But this is not the first leak to these journalists. This is not the first leak that the ICIJ has handled. It's not the first time they've disseminated names. It happened with Caribbean accounts 4 or 5 years ago. And that's all information that's been out there. There are cooperators, in addition to what's coming into the formal programs. There are cooperators, and there are other tools that that the government has been using, which some of you may have seen, but everyone should be aware of. Certainly, there's the ability, if a bank has a U.S. presence, to seek the records of the bank here. But there is just simply the power of the dollar. And if a bank has a U.S. correspondent account here, which is any bank that's dealing in U.S. dollars, there is a common practice now to send a subpoena or a summons to seek the correspondent records here and then work backwards from that information. So if there's a name that comes through the Panama Papers disclosure and it matches something else that's already in an investigative database, there are these other tools to begin to go down that road. So I think from an initial enforcement, that's what we're going to see. I think we want to get to some questions.
Sure. Well, I wanted to follow up with Daniel on that, given the fact that so much of this information may already be out there. How do you think this is going to change the concerns of the banking industry, and particularly in your role as chair of FIBA's Compliance Committee? What are you hearing as far as the industry concerns regarding this leak?
Thank you, Isabel. First of all, I want to thank our BSA committee members that are present here, that are watching us through this webinar. We've received a bunch of questions that I hope I'm going to answer with today's presentation. So thank you all for joining us here today and online. Second, before I start, I also want to thank our foreign correspondent colleagues who are watching us abroad. I know that through these webinars, FIBA is able to reach Latin America, Asia, and Europe. So thank you so much for attending. And yes, all of this, as Kathy was mentioning, brings a lot of concerns. First of all, I want to go through a timeline of issues that we've been seeing out there. As a standard, we meet, the BSA compliance officers, we meet once every quarter. And the last meeting of the year is extremely important because we go over the exams and our audits. And most of us that were here, and I see a couple of faces that joined us in late December or November when we had that meeting, one of the consensus was that it was very quiet. Very quiet. And we were happy. Quiet is good. In this day and age, quiet is good. We reported that there were no major issues. Our exams went well. Everything was hunky-dory. Well, the timeline that you guys see on screen is going to show you how not quiet it is nowadays, and specifically with the Panama Papers. So in December 2015, Panama enforces legislation, Law 18 of April 2015, where they restrict the usage of bearer shares to authorized custodians. Quickly, in February, during the plenary meeting of FATF in Paris, the FATF congratulated Panama for the significant progress that they made and basically took them off the gray list. But then, in the week of April, the 3rd, the Panama Papers surfaces, and there's news everywhere. You open up a newspaper today, and you're going to see another politically exposed person resign. Actually, this was just this week where we saw someone else have resigned. So there are already 2 resignations. There are a bunch of names that are thrown out there. I want to highlight 2 things of basically of the news that went on. First thing was the news of high political officials and folks around the world, and then the word hide there in the slide is highlighted, hiding their money from government regulation and public scrutiny using shell companies. And a lot of people say and don't understand, well, in today's world, it's very regulated. How can you do this? And there's some loopholes, and those are our concerns, which we'll go over in a minute. And then finally, France, not FATF, because we haven't seen that yet, but France goes and says during last week that they want to include Panama again on its list of non-cooperative countries for tax purposes. Their news of, and this is important for us, of the firm that is mentioned there, the firm's offices in El Salvador, in Peru, and in Panama being seized due to international investigations. Why is that important? Because obviously someone is looking to seek some wrongdoing and some criminal stuff there. And that's why there are seizures. And all of this behind, and what concerns us, and we'll go through it in a minute, is because of sanctions that could come. Kathy was mentioning in her opening presentation, if there's something there that is linked to a terrorist or something like that, I'm pretty sure the people in OFAC are going to start, with sanctions and so forth. So amongst the issues, and there are only 3, major ones that we're going to talk about today. The first one, I think, is customer due diligence. It's been over, I think, 3 years now that we've been waiting for the proposed rule on CDD to come out, and it still hasn't. We heard this week news that Vincent is in the last stages of taking the CDD rule to the Office of Budget in Washington, and that they will publish that within, I guess, it's 90 days. So hopefully we will see that, okay? But CDD, and so why CDD? And the slides that I'm going to show you next are basically my imagination, because the names of the slides are all invented here, but they're very close to what in Miami we see the banking industry on a day-to-day basis. It is so popular amongst us here that we have dubbed it the spider bank. And this is what we want to show. So in the proposed CDD rules, they talk, or we've been hearing about, the 25% cut. And this slide right here, I'm going to try and illustrate it, stand up here for a little while, but the slide here that you guys see is on a typical building, condo, you could call it a skyrise or a hotel here in Miami, Florida, where the investors have gone to an attorney or an accountant and have set up this structure. Now, if a bank in today's day adopts the 25% rule, the financial institution will be getting the items in blue. So after the hotel comes a little North Miami Properties, again, named invented here. That's 33%, that's over 25, we'll be getting that. And then from there, we'd be getting that one up there, which is 33%, going to a trust in the name of Pedro, and then finally, for beneficiary, Pedro's children and his wife. But if that bank adopts 25%, they're not getting all this. Or even this, part of the structure. All these down here are 18%, 14%, where an Ivan is there, where there's another offshore jurisdiction, and probably a company here that has bearer shares or that bearer share capability. So this bank here is only going to get that these two pictures. Now, if a bank adopts the 10%, which again, we haven't gotten the final rule, but we go by 10%, the bank will be seeing all these in gray, but we'll still be missing one here in the corporate structure that's 8%, that's tied to a trading company in an offshore jurisdiction, and the bank will not know who that is. So in terms of the leak and the names and the folks that are out there, this is the concern that we have here. While we want to do our due diligence, we want to come together as a team and basically agree on those same level playing fields. What are we all going to agree? Because what we hear time and time again is the customer coming and say, wait a second, nobody's asking me for this at the other bank down the corner. And we meet on a quarterly basis. It's the same thing with the second slide. This is, I think, a much more simple slide than the one before. You got a condo here in Miami. And again, I'm talking about Miami. I'm talking about condominiums, high-rises here. But this one here, if you adopt the 25%, obviously you go blue, and you get the Carlos up there. But if you do not, and you go by the 10%, you're still losing, you're still not getting all these in red. And finally, if you go by 25%, all these various shareholders that are out here, you're not getting the offshore jurisdiction that owns a percentage here. And finally, there's a question mark there. So CDD is something that, yes, we are concerned about, something that we are looking into, something that we discuss on a quarterly basis in our BSA committee meetings here. And I guess that, and we're discussing with Kathy, I mean, really, there's no final answer to this. And there's what we've heard at time and time again, we hear it again with the last news under the proposed rulemaking for CDD, is that it's going to have to be on the bank's risk appetite. And again, you know, that brings what we want to do as a team. Kathy, I mean, your thoughts?
Yeah, I had a couple of thoughts just looking at this. And the one thing I'll say on the CDD is I just want to talk about the other issue, which is control. Because it does go to who's got control over the structure.
It's a mix.
And if you simply look at the percents wherever they land, but you overlook who's actually controlling. I mean, if you look at that, any of those choices, if the control is actually where those question marks are, then that's I think the hard question. And I will tell you that this is not a legal standard. This is my standard, but it's what I've been telling clients for a long time about when they have to report on an FBAR. And when they talk about control, and what I say is, if you can call somebody, can make something happen in that account, you have control. I don't care how many layers you put between you and who calls the banker, you have control. And I do see an issue, I think from the bank customer facing, you need to pay attention to who can call you and who you're going to listen to. And at a point where you know that person is actually getting the direction from somebody else, that even if it's not triggering percents, the government is going to be looking at that as some kind of knowledge requirement as to who that actual control is.
Okay, and we've heard a lot, you know, talking about control, we've heard a lot the word warm body or heartbeat, get down to that heartbeat. So in many of these instances, if you don't go, I want to point that out, if you don't go and drill down that far, you're not going to get to that heartbeat. You'll probably get to a Carlos up there, but look at all these heartbeats in purple, and once again, going down further than the percentage. So, again, that's a challenge.
Yeah, and I don't think that it's fair, and I don't think it's the government's intention to hold the financial community to knowledge that is being kept from them. I mean, if the structures are set up and there's somebody behind somebody, and you've done your due diligence on what's in front of you, that's one thing. But there is a concept pretty well ingrained in enforcement about willful blindness. If you deliberately turn an eye, turn the other way to what's in front of you, and specific examples ranging from obviously that's wrong to more of a gray area. The most glaring example is somebody comes into you with 2 passports and you tell them to put one away because for whatever reason you don't want to disclose on a particular nationality and you want the other one. That probably even crosses beyond willful blindness. I mean, that's probably knowledge. What we saw with the European banks is that when the qualified intermediary policies came in, when that program came in, the banks were directing people, and if you look at the deferred prosecution agreements and the criminal charges that have been brought against banks, and they're out there, the banks were directing their customers to outside facilitators, for want of a better word, who were setting up Panamanian entities, Liechtenstein entities, to put the barrier there so that the bank could say, oh, my client is this entity, and I can start to ignore the actual beneficial owner. And the absolute and unequivocal response of the Department of Justice has been, we don't care that you technically complied with QI. We don't care that you did that because you complied with QI while setting up something you knew wasn't true. So that you could meet the QI standards by creating a structure that allowed you to hide what the government ultimately wanted you to be finding out. So I think, I think when I look at this, that's also a question that you need to be sensitive to. If and again, I want to keep emphasizing this is not to say everything that this law firm did was bad. It's not to say that everything that's done in private banking is bad. There's a purpose to all of this. But when the government looks, the government's going to look at
Processes.
Process, absolutely, and whether your systems were set up. And I think this may be one of the more important messages, whether your systems were set up to let everybody know you wanted this to be done correctly. And then if mistakes were made, as opposed to systems that were set up on paper that said, yes, we have these internal values, but in fact, you're rewarding people who are building their book of business in ways that you should know they're turning a blind eye to something. I mean, I think those are the things that we saw. And when when you look at a chart like that, I don't think anybody would expect you necessarily to know about Ignacio and Pablo all the way over here, unless this was all structured in a way that for them, and that there was something in there that
Kathy, let me add something important for our institutions, okay? A couple of points here. You'll never get to this if you go by Sunbiz or anything like that. You get to this requesting the customer to give you operating agreements, or if not, to get you what we call an affidavit of beneficial ownership. So that's something very important to keep in mind. I'm going to go quickly to the next slide. What else concerns us? And I've gotten a lot of questions. This slide is specifically for our member institutions who have asked us, well, is there a listing of all these people that are leaked, and how do I get that? So we want to do our data mining too. There are pros and investigations that are going on, well, we want to do our due diligence too, and we want to join the party. Okay, so data mining and BSA reviews, how do we get to them? And these are the slides that follows. So if, for the member institutions, if you go online, and this is public information, to the International Consortium of Investigative Journalists, you'll find this website, and then you'll see where I put a click there. You can click there. This will take you to an area where you can go to people, and then if you click there, you'll see that they have posted the politically exposed people in one tab, and the other one they called politicians and public officers and country leaders. Now, the interesting thing here with this is that if you click on every one of these and go by, you'll get that information. So we just did a click there, and you'll get the names of these companies. Below that, you'll see the relationship and a brief history of how they this investigative journalist, how they mapped these folks to those companies. And finally, you get something like this where you can see bearer shares or their relationship there, and it gives you the type of relationship. So this information is out there now. The ICIG has promised to deliver a full listing. I believe that that date will be made, but this is out there. Now, with all this, what you can do for our member institutions, again, is extract that information, plug it onto an Excel spreadsheet, and this list goes on and on and on. It's about 385 companies in there. But you could use this to do a bunch of stuff. You could plug it in. You have systems folks that can help you. You can data mine. You can basically search your wire transfers. I was talking to Kathy before. Well, maybe it's not that you have these folks as customers. But what if your customer is receiving transactions or sending transactions to these companies? And that's something that you have to be concerned about. Before I get to EDD, I had a couple of questions, Isabelle, and during the, my work with the BSA committee members. And some folks were asking me, well, how far do we go back, and should we go back that far? Should we do a look back? Is this something? I think that the answer to that is what type of due diligence? Once you do identify, once your systems, governments or your system group comes back with results, you need to do some analysis. But then once you get a listing of all these customers that you may have, if you've got hits or not, or customers that are transacting with, what you can do is basically see if you've done high-risk reviews or if they've been subject to prior monitoring and make that decision based on that. And then obviously the other question that I'm getting as well is, should we do a review on the specific law firm that has been mentioned in the press? And I believe the answer is yes, from a reputational risk. You could pull, I'm pretty sure your systems groups can pull a report of companies that are incorporated in that country, and then you could probably look at the articles of incorporation and see which customer went to that law firm. Not that the law firm has until now done anything wrong, right? But at least see what relationship they have, if anything, and then address it from a reputational risk, which is what we always do to protect our financial institutions.
Well, and if I could add also, I think that you can add an overlay of size to that, because if you have an account that had $5,000 at its max and 20 layers, nobody in there is worth that much, but you certainly would want to be looking at the higher value ones. And this, maybe you could address it as you're talking. The question then comes up to me as someone who worked in wealth management for many years. We would never have opened an account with that much complexity to it unless we understood exactly where all the layers were. It seems to me that some of these accounts may be in institutions where wealth management isn't their primary business, and maybe they don't have the tools for that. So can you maybe address what types of tools those people should be?
Absolutely, and that's a great point, Isabel. Thank you so much. Most of these, and you saw from my slide, once again, these are things that are in my imagination, but are coming real. If you look, that first box says Miami Condo LLC, and I'm going to take this away from my boss, but it's something that she invented. Lee, this is yours. LLC is, let's look a little bit closer. Let's look closer at that. And you're absolutely right, because this could be something that is housed within a branch instead of a wealth management area. And, the people at branches say, well, it's the hotel right across. It's, it's right there. But in reality, you've got this very complex scenario with foreign investors, and you're sitting there thinking, look, it's just basically an LLC, and I went to Sunbiz, and I know who the members are, but really, do you know who's behind it? And I think that's the key question there is for any folks in here who have offices or branches or branch personnel, training and showing this type of slides and how this could impact us is something that we want to look at.
I think that comes back to the point that I was making about the importance. Everybody knows you have to have a compliance program. That's old news. Compliance program has to be real. It has to not just be lip service, something that you hand out that people stick in a drawer or keep in an online little file folder and never look at again, or know that they can link through to see it if they want someday. There has to be training, and there has to be a consistent message that you don't want God bless you, the accounts or the structures that are being used for illegal purposes in your institution. And again, when I heard Danny speak, the reaction that I had was, it just clicked in my head. Yes, branch banking was where you saw the problems with the banks that have already had these issues, or what the banks would like to say were rogue relationship managers. But what you looked at was you saw incentives built into a bank to build that book and to look the other way as long as that business was growing, and not incentives built in to maintain compliance. And I just want to echo your point, because from a law enforcement point of view, one of the main things that the government will look at in determining whether the institution has a problem, whether the bank has a problem, is were there systems in place to avoid this, and somehow it happened anyway, or the other end of the spectrum, were people being motivated to do this, and we're on that gray line on.
This final point, of concern is something that is really challenging, and it's open for discussion, and obviously amongst the BSA committee members and amongst the Wealth Management Forum, I think that this is something that we're going to be talking for a long time, EDD. So regularly, where law firms, international or local, they fall on what we call professional service providers. And normally, these are the normal standard compliance due diligence that we do. So we make sure that, if there are incorporated in offshore jurisdiction, that there's a why. We make sure that they have or not the ability to issue bearer shares. We make sure that they're not a money service business, or they've got PEPs as assigners or shareholders. But should we do more? And this is I think the burning question here. As you obviously know, Isabelle, the international law firms is a great source of referral for wealth management as well. But let's look at the stuff that our committee members have come up. So in addition to the standard KYC info, should we collect these things? Name of expected entities and people to transact, something to have already, expected volume by each, jurisdiction for each, banks who are going to originate wires and entities, types of debits and credits expected. Most of this is already in the KYC. But look at this last one. Does the firm have a BSA program, KYC program, CDD, EDD? And I'm putting it in red because some of us have already asked for that, and some of us have already gotten a huge report from a law firm abroad saying, here's my compliance program, and I've got a designated compliance officer. So firms abroad are already expecting this, I believe. And should we have meetings with the BSA compliance officer there prior to that account opening to agree on terms and conditions and on how they're doing their due diligence, how they're doing to decipher that big spider web, so that when that customer gets here, we're not basically caught not knowing that what's going to happen in the account. Finally, and I guess a fourth point here, these are some additional questions that we're having and that we're working together as a team. Up till now, only one law firm has been mentioned out there in the press, but we're asking ourselves, is this the start to a bunch of firms, being leaked and the information being out there and us having to do all this work regarding U.S. federal prosecutors who may seek to establish jurisdiction over the firm persons through activities involving what you were saying, Kathy, foreign correspondent accounts? Should we expect to see any sanctions? That's very scary. What role and responsibilities do local and international law firms have on beneficial ownership? Like I was saying again, you have a CDD program, KYC. And finally, look at the last one. Should we do a cost-benefit analysis? Or perhaps charge them a compliance fee? This is a lot of work. This is for the financial institution to keep an account that's, international-wise, is going to cost us money, time, resources, and that's kind of what was going on.
I think the answer to most of the questions that you just posed is yes.
Yeah.
Kathy, when you respond to that, maybe you could also address another question, which is a little bit of maybe the hypocrisy of the United States in approaching this, because when HSBC or when UBS was named with all the U.S. tax people, you didn't have to name all the rest of the banks for it eventually to come out. So if there's one law firm in Panama doing this, it's likely that there's going to be more, and that's going to start coming out too. But the dirty little secret is that we have our own issue here in the U.S., don't we, through the LLCs? So how do you think that's going to be addressed by the U.S.?
There's a lot of questions there. We can go back to some of the, if you want to bring that slide back up, I'm happy to go over some of those points, but let me tackle that last question. I think when we were talking in advance of this panel, somebody said this may lead us to the hair-raising topic. Other countries have said in so many words that through our Delaware structures, our Nevada structures, other states, the United States is a tax haven for the activities of non-U.S. persons who want to hide money here, or hide money here for any other purpose. And there have been reports. There's been various forms of legislation on the federal level that tend to die in Congress to try to address that. I believe there is an awareness of that concern. I think, I want to maybe not accept the word hypocrisy so much. Sorry, I'm being asked to speak loud again. But I'm also trying to avoid the word arrogance. I mean, these are words I'm trying to avoid because I was part of our government, and these were the approaches that we took. On the U.S. jurisdictional side, the government has taken the position that if the activity had an impact in the United States, that there is U.S. jurisdiction. So you have seen prosecutions of banks, bankers, lawyers, financial advisors, and account holders, but the account holders less because they're U.S. people, but in those earlier categories, you have seen prosecutions of individuals who never set foot in the United States, of banks that have no presence in the United States. But there is this view by the government that if you engaged in a conspiracy with a U.S. person to evade U.S. tax or to commit another crime here, that the United States has jurisdiction over that. And as I've said, you have the the fact of these transactions happening in U.S. dollars and the correspondent accounts here adding a U.S. component of activity that bolsters that. So you've had this aggressive but effective. I mean, it's the convictions are out there, the pleas have been had, trials have been held, approached by the Department of Justice. I believe there is an awareness, I know that there is an awareness now that there needs to be some reciprocity. And we've seen situations where at least one, and it was Norway, that asked for sort of a treaty request on the United States, and to respond to the treaty request, the IRS issued summonses to banks in the United States to collect the information to give to the Norwegian government. And it was the type of John Doe summons that we use in our own law enforcement to say, give us all your accounts that fit this model. We don't know the names of the account holders. We just know that they'll fit this profile. They'll be Norwegian, or they'll fit some other profile. I think you will see this, at least a law enforcement approach to that kind of reciprocity. And I know you've seen it effect to the exchange of information. I can't specifically answer that we have our own, we allow our own structures that allow beneficial owner secrecy. I mean, that is a fact, and the world is upset about it. The world is pointing fingers at the United States for that. I think the hard question, the hair-raising one, is when the activity is a non-U.S. person engaged in activity in the United States with the intention of concealing the activity because of a potential crime in the home country, usually tax evasion. The classic one would be tax evasion. So somebody sets up the entities here, makes the investments here, and takes advantage of that structure because they don't want their home country to know about those investments. There's a Supreme Court decision decided a long time ago. If you actually go Google it, you will find that when it came out, I actually wrote articles saying it was wrong. But it is the law, and it does say that that kind of activity can be charged as a crime here. So you have the second issue of not just will we help in the investigations by other countries, but will, given the right set of facts, the United States charge a money laundering violation for investment in real estate in New York or Miami. And I think you've got that clear shot across the bow with FinCEN's mini program right now with the real estate industry.
But the GTOs, you're talking about the GTOs.
Right.
Yeah, well,
Right.
That's what I was saying. We've got 3 here in Miami-Dade, and so that keeps us again on our toes. But yes, we have been looking very closely, and of course the real estate GTO is something that is kind of shifting that the CDD and all that stuff to other areas in the industry because of the need.
Well, I'm a New Yorker, right? And I spent 2 years commuting from New York to Washington to serve in the Department of Justice, and a good fraction of that time was spent on offshore enforcement, on the enforcement concerning offshore accounts and the investigations of the banks. The week that I returned home permanently, left and went to be home permanently, New York Magazine arrives on my doorstep. And I live in an apartment building, so literally right outside my door. And the headline was, "New Swiss Banks, New York City Real Estate." And I don't think the government is going to ignore those concerns. So you have that added layer.
Well, and I think one of the challenges, particularly for the wealth management industry, isn't the opening of new accounts or the onboarding of the spider web, because nobody would do that, but it's what we, I guess, euphemistically call our legacy accounts, accounts that have been open for years, way before we were sensitive to the idea of trying to figure out whether people were working or were compliant in their home country. It used to be, as long as they're not committing a crime in the U.S., we're okay with that account. So going back to your question about look-backs and what people should be doing proactively right now, what would you suggest or what would you recommend that banks be doing for those legacy accounts that maybe, could present some questions?
Well, the same thing that we're doing in our institutions. Basically, we have to go through so many reviews. Specifically, we've got where we have flagged and identified all our private investment companies, our PICs and IBCs, like you were saying, that have been held in our institution for years, undergo extreme scrutiny. So if we had a PIC, and now again with this law firm that is mentioned all over the press, we would look at the prior reviews of what they've done and basically address the fact that they went to this law firm. The law firm, as Kathy was saying, for now hasn't done anything wrongdoing, but there are probes. And so obviously, due to that, there are reputational risks that brings to the financial institution. That's a very tough question that the institution, I guess, if BSA and compliance doesn't have an issue. Now, if you've got issues with any transactions that you suspect and now have additional information, then that's going to be different. But if the account's been standard and nothing's been, alerting, or if the high-risk reviews or PIC reviews and the financial information and the site visits and everything that you work on has been standard, the only question there, I think, and it's a standard question, is, well, why did you go to this law firm and kind of assess? Well, I went to the law firm because, there are tons of law firms, and I went to establish my private investment company. I think to document at least that you're addressing that. By the way, and talking about that, several institutions have been asking me, has anybody already heard from a regulator on this? And yes, we have. We were in a meeting a week ago with members of Homeland Security Investigations, which I'm pretty sure they're hearing. We had some folks who were there, and we want to thank them today for attending to this webinar. But during that meeting, I was side by side with one of our colleagues, one of the big banks, and he had his laptop. He said, you know what? Look at this email. And it was his examiner saying, what are you doing to cover for this? Have you done data mining already, and are you doing these searches? What due diligence? And so also we've heard from consultants that work out there with many institutions that some examiners, and I don't know to what extent this is accurate, but this is what's going on, are looking to outsource their field work because they need more staff because of all the stuff that's going on in Miami-Dade. So obviously this is something that we expect, and that's why I started saying that last year was kind of quiet, and this year it's really in the news and everything out there.
Well, but speaking of the regulators, I mean, one of the concerns I think is that they're, when I go as a U.S. citizen to open an account, I don't have to provide my tax return to the bank. It's assumed that I'm paying my taxes and they'll report it on the 1099 or whatever. What guidance do you think we could expect, or should we be maybe looking for from the regulators regarding how offshore clients are, whether they're paying their taxes and whether entities are satisfying the tax laws of their ultimate beneficial owners? Kathy?
Well, I mean, I've been listening to this with some interest because I see it, I've seen it from both sides, and I think it is a real dilemma. I started today saying there are very good reasons for the services that are provided by what I would call private banking. I mean, I told the story for the warm-up to this that affects me quite a lot. I represented a family in a South American country some years ago. Well, you need to know the country to know the story. They were Chilean, and their accounts had all been frozen in an investigation in the United States because in a small piece of the family business there was a cambio, and some drug money had gone through that account. Those are the facts. And for the United States to sort that out, they froze the entire family's global accounts to the extent that they touched the United States. And I asked them at the time, I said, why are all your bank accounts being run through a New York private banking facility? And the answer came back that when Allende came in, the bank stayed. And from their point of view, the bank was something they could put their faith in more than in their own government. And I think you can repeat that story around the world. And I think we certainly saw it with what we saw in the Swiss accounts. I mean, you've got Holocaust money, you've got Persian money, you've got, just pick your world crisis, and there's good reasons for all of this. But I think from the government's point of view, there will be a look to the indicia of, are you doing what you're doing for those reasons, or are you doing what you're doing for the concealment from the home country, for tax evasion, or because you're trying to hide the source of the money because it's drug money, or because you're trying to hide the transaction because it's terrorist money. And I just keep saying this over and over, where are your programs to understand that and to incentivize that your business is built for some reasons and not for other reasons? To me, I think the most controversial to me is hold all mail, because without question, every prosecutor I've ever talked to, every IRS agent I've ever talked to, used hold all mail as proof that there was tax evasion involved here. And for those of you who are listening, I see heads shaking in the room, and I was one of those heads shaking in the room in government and saying you can't just go alone on hold all mail because there's reasons for that. But it's how many of those indicia do you have and where you're balancing. The one question I want to address is the look back question, and I may be making these comments to maybe nobody, and maybe to the smallest segment of the audience. But where either you know now that there is a historic problem in how you've been operating, or the due diligence that you do now because you're taking a harder look because these issues are all surfacing, makes you realize there's been either rogue relationship managers or bad branch banking or a systemic problem. My very strong recommendation would be to get legal advice, but I think the legal advice may very well be to consider coming forward and cleaning that up with the government. I talked about the Swiss bank program, which was a formal program to get the Swiss banks to be able to come forward, given the specific issues with Swiss secrecy law and the Swiss treaty. But the government is always open to hearing, we've had this historic problem, we are remedying this historic problem, we'd like to come clean with you. There may be a cost. I mean, I'm not saying this is a free ride. There may be a cost, but it's a better result than if all of these chains of information that are out there lead to you, and then they're looking at you from the outside.
And Kevin, to back that up, we heard last week, it was in the press, UK regulators have given the banks in the United Kingdom 1 week to come forward.
1 week.
1 week deadline to come forward and declare if they've got customers who are linked and how to the law firm that's mentioned out there. So that's why I'm saying that when you do your review, even if you've got a long-standing customer, this is what's happening in the United Kingdom. At least ask the customer, why'd you go to this law firm and what was your relationship with them? So that you have that documented and you don't have the examiner coming in and saying, I'm giving you a week. Go ahead and do that. I've got it already.
Or worse, that they've actually gone to your account holder they've gone to them, and they've gone to this or a different law firm that has decided that they're going to cooperate, and their story is, wow, we were meeting on a regular basis with these 3 guys at such and such bank, and now the investigation has turned to the bank. If there's a problem, the sooner you get your arms around it through an internal investigation, and the sooner you think through, and there's no it's not like I can sit here and say do these 3 things. I mean, it's a very careful process to figure out what the extent of the problem is, what internal remedial steps you need to take, and then to what degree do you want to go forward to the regulators and possibly the Department of Justice and say,
Self-disclosure.
yeah, it's self-disclosed. But it is always better than if they find you.
Oh, yeah.
There have been a couple of questions that have come in. I want to consolidate 2 into one. One of them is regarding the fact that the top 10 banks that held accounts for the structures in the Panama Papers are all reported to be European banks. And the question is, weren't these banks required to conduct their CDD and EDD on the PEP accounts? And that sort of consolidates with another question, which is, so far, it doesn't look like a lot of U.S. citizens have been implicated in the Panama Papers. So is this going to create a Switzerland-like effect for non-U.S. account holders, which maybe the answer is yes, huh?
Yeah, I actually did a check of the banks that were on the top 10 list against the banks that have come in through the Swiss bank program, or that have otherwise been implicated in those investigations. And there's some agreement. I'm not 100% lining up, but there's some agreement. So we may, I mean, let me take a step back on the Panama Papers. You may have a lot of juicy news out there where either the banks or the entities and the account holders and the individuals have already remedied their problems. I mean, we're 8 years into the voluntary disclosure program here. We're into a voluntary disclosure program by the Swiss banks. You may have seen a lot of that already being remedied. It's my understanding that you're seeing the top flashy stuff being reported now from the Panamanian disclosures. It's digging. I don't know what you're going to find. But yes, I again, with other countries, I don't think it's news either. You've seen lots of other countries doing what the U.S. has been doing, and cooperation among the countries on all of that. If you actually go back about 3 years, you can actually find a press release that is issued from the IRS, the UK, and Australia, talking about a similar kind of database and cooperative efforts that were being made in connection with that. So I think you've seen some of this already. I think some of this may have been remedied already. I do think you've seen other countries handling all of this, addressing this specifically, to answer your question. And then I do think you may see some enforcement here on the Pastantino type theories. So I think all of that is out there to be concerned about. I do want to, one point I kind of want to make that I think it's lost sometimes about intergovernmental cooperation. The visible way that governments exchange information are treaties, through treaty requests, treaty processes. And in the United States, that's secret. When the U.S. makes a treaty request to another country or receives one, by statute, the government does not disclose those treaty exchanges. But there's a lot of flow of information that you don't see that's going back and forth between governments that way. But below the surface, the thing you're really not seeing is the information that comes in not through the regular government reporting processes. So if you want information about a U.S. taxpayer from the United States, you're going to have to file a sort of treaty if you're another country, similar to the U.S. reciprocally. But if you have information that has been obtained by law enforcement means that isn't protected by the confidentiality of tax information, because you got it in a different way, there can be a more free sharing of that information. And I think, the Panama Papers is obviously out there publicly, but to the extent that there is information that comes in that doesn't get public notice that it's coming, but the governments have it, there's a lot more sharing than people know.
Interesting. I wanted to just, one question they asked to see the website again, so we're going to put that up right away.
Okay.
Yeah, the website for the ICIJ, I guess, to do your data mining. There we go.
So here you go.
Yeah, so it's Panama Papers, yeah.
Click there, and then folks can get the people button there, and then there's the listing of the public officials.
Here's an interesting question for you, Danny. Someone is asking whether other banks or banks in general are going to or should begin creating customer records for intermediary layers, people who are not actually customers of the bank but maybe related parties because they're layers of that.
We've asked this question time and time again, specifically when we talk about the topic of correspondent banking. We brought it up at many conferences with FIBA and our AML conference. And the question basically goes is, do you need to create like a shadow file for not your customer, but it's your foreign correspondent bank's customer that's transacting on a common basis? There has been from our examiners really no direct answer on that, but inherently, if you open up that correspondent account, you're supposed to know kind of who's transacting and not everybody, right? But on a risk-based approach, and we hear that time and time again as well, who are the main transactors and in terms of knowing more about that person or that company, when you do your site visit, specifically for correspondent banking, we tend to go and look at the customer file and look at the KYC and basically evaluate how that bank is doing their CDD.
I haven't seen, I think right now, from a law enforcement point of view, the correspondent accounts have proven to be a great source of information. I mean, but for the most part, the correspondent banks have been viewed as custodians. 100% of what I've seen, correspondent banks have been viewed as custodians. The information passed through the correspondent account, the transaction goes that way. The documents are here. It's an easy way for the United States to get information without having to go to a bank secrecy country, duplicate the treaty process, and wait out those delays. You get it like that because, thank you all who run correspondent accounts. You tend to turn over those documents very quickly, and and that's what law enforcement wants to move forward. I just haven't seen it that anyone has looked specifically at the correspondent account relationship. Right now, there's a target-rich environment of primary relationships for governments to be looking at. It comes down to something that I said to a client years ago. You don't want to be the institution through which the money moved that paid for the flight lessons for the people who flew the planes. And I say that very carefully because I'm a New Yorker. You don't want to be that institution, so you want that level of care. On the tax level of care, I think there's layers and layers that are better enforcement targets, and there is a certain triage of government resources for correspondent relationships.
But I mean, even from the banks themselves, particularly if it's a large relationship, it may be prudent to begin doing that work within house, even if it's not going to be looked at by the regulators yet.
Yeah.
And there was a question here: avoidance versus evasion. Where and how will banks draw the line? I think you've answered that. It's going to be whether avoidance versus evasion. How do you draw that line? I think.
Well, tax evasion, very technically, is United States. It requires a showing of willfulness. It is one of the few crimes where you cannot be found guilty of the crime unless you knew that what the law was and you acted intentionally to violate. the standard is a voluntary and intentional violation of a known legal duty. So that is a standard the government needs to get on the evasion level over the avoidance level. So what you find in those investigations is there's going to be a look at intent, knowledge and intent. Now you can have willful blindness feed into that, you know, but that's where you're seeing criminal cases. It's because the government is seeing a pattern of facts of incentives to look the other way and interactions with the clients to help educate how to do things, to take back the second passport, to structure it in some other way. Now, if you take a situation, and I don't want to speak to this law firm, but if you take a situation where a law firm knows that that bank is going to look the other way, where the bank knows that that law firm is going to move the documents through without asking questions, and then you've got a large, you know, it's a noticeable volume of that activity happening between the two of them. That's, I think, where you're going to start to see it crossing over. Mistakes happen, and that is a defense to these kinds of charges. It's the more systemic issues. But again, the message is you can have those systemic issues without the top level of the bank actually knowing. You can have branch problems, relationship manager problems.
Well, that also goes to your program, though. I mean, if the top line doesn't know what's going on at the bottom, there may be some breakdown in the program implementation.
That would probably be what the government would say.
Are there any questions from here in the room? I know we've been taking them online. Ramon?
Well, I'm going to address this to Kathy, and I don't know that there's an answer, but I'd like to hear your opinion. We've read a lot in the last week, and we don't know how much of it ends up in an indictment and how much of it is you got caught in the net that you were showing up there, and all you do is you have a company.
Right.
One of the things that got to me, and I understand Hezbollah is a terrorist organization, and even the Arab countries have recently declared them terrorists. One of the things that arrived yesterday among the many emails we get was that the Fonseca firm was advising and structuring complex structures for Venezuela and Cuba to channel monies to Hezbollah. Let's assume that turns out to be true. We don't know, where it's going. From a Department of Justice standpoint, what happens now? In view of the fact that this administration has liberalized the relationships with Cuba, what would happen?
There's a lot of pieces to that.
OFAC.
Yeah, there's a lot of pieces to that. I want to say first that because I just feel this is important. In my experience in law enforcement, it mattered very little what the administration wanted. It's really what the law enforcement officials are seeing as criminal activity. You can get sort of priorities at the top. We want to use your resources this way or that way. But you don't see either guidance or interference on a political level in the ordinary course. So I want to take that as kind of out of the question. But I would think that if you have OFAC violations, I would think that's going to move to the very top of the concerns here. And again, I would go back to what I said earlier about the expansive view the United States takes of U.S. jurisdiction in those situations. So if you're actually describing a situation where the structure was funding all non-U.S., I mean, that's what I sort of heard implicit in your question. I can see ways that the United States may say they were dollar transactions, and at some point they needed to move it through the U.S. financial system simply doing dollar transactions, or whoever the players are, and whether there's an impact team. So I think it's at the pieces of your question. I mean, one question I don't know the answer to, but I've seen raised, and I find fascinating, but I just haven't stared at it hard enough, is that Panama is a dollar jurisdiction country. And, you know, and what's going to happen when, you know, when the U.S. stares at that, and whether they're just simply going to say, well, you know, you're dealing with U.S. dollars, but it's not the official currency. You know, I think that's really interesting.
Well, we're running down. We have, 5-6 minutes left. I don't know, Danny, if you want to add some closing thoughts here. Oh, do we have another question here? Yes. Oh, okay. Any other questions from the audience here? I mean, we've got one question here on the difference between bearer shares and nominee shares, whether they both sort of achieve the same result and whether those should be addressed as well. Do you want to field that one?
Well, you know, we have we haven't seen that many accounts here, you know, from our perspective that have nominee shareholder, but it's been a very tough subject to address. One of the guidelines to look at those type of accounts are the type of specific legal contracts that bind that nominee shareholder to the true shareholder, and would the bank be getting the names of the ultimate shareholder versus the nominee shareholder. So that's something that's shady, that's out there, that is very hard to work. We've worked a couple of them with our legal counsel, but in our day-to-day, we haven't seen that many, and you know, that's from that.
I would actually go back to what I said earlier. If you can call a guy, you can call a guy who can make the money move. That's, you know, so is the nominee shareholder really answering to somebody else, and you know it's to somebody else? You know, if every time, you know, that you interact with the nominee shareholder, that he says, I need to call Charlie, you better know who Charlie is, you know, because the fact that you're not taking the call directly, you know, and if you're actually being copied on the emails, you know, like, right. Charlie, what should we do now? And then the next email is forwarded to you that says, you know, please do this. I've made an independent decision to do this. Not optimal.
Right. So any last thoughts on this, Danny? What?
Well, as I was saying from the very start, there's a lot of work that is out there. We've laid out some good examples of what the banks can do for now, to prepare for examinations, to prepare for audits, specifically being such a topic that's out there every day in the press and through all the news. So I think we've made some groundwork there. There's a lot of work that I think that folks right now are going to go back and start plugging in to their systems and looking at and making decisions. And from that also, there's a lot of decisions that I think the wealth management conference that is happening May the 5th and 6th may bring some answers, not from the wealth management perspective, as the wealth managers come together and as they look towards the enhanced due diligence that are being proposed and are being discussed out to do with the banking institutions now asking from the law firms that they're going to be doing business with abroad and locally here. So, you know, those are kind of my thoughts, that, you know, work.
And what about you, Kathy? Any last thoughts you want to leave us with on this?
Well, I feel privileged to have been part of this discussion. I think I want to applaud FIBA and everybody who brought this together, and everybody who is concerned in looking at this issue at this point. I think it says a lot that the concerns are heightened and people are paying attention. I started out by saying not every Panamanian structure, not every piece of advice given by any particular law firm, this one, should be automatically viewed as violating somebody's laws. But to the extent that an institution believes it may have problems, I can't say it enough, the strength of the compliance program, the effectiveness of the compliance program, and then if there are problems to be remedied, an internal investigation, remedial steps, and that deciding how to go forward with the regulators and government about that are things to be concerned about. And then I echo everything here that's been said about the concerns going forward in an increasingly sensitive environment.
So one last call. Any other questions in the room? Well, I definitely want to thank Kathy and Danny for being here. It's been extremely interesting. We appreciate all your comments. I think all of us come away with this, from this with a heightened understanding and sensitivity and kind of a sense that this isn't going to go away anytime soon. So we will stay tuned. I also want to let you know that anyone who attended today's webinar is going to receive a discount to attend and learn more about today's topic at the FIBA Wealth Management Forum in Miami. As we remind you, it's on May 5th and 6th at the Ritz-Carlton Hotel in Coconut Grove, and you can find more information about the forum at www.fibawealthmanagement.com, or you can call FIBA for more information at 305-539-3774. Again, thank you to all who have been here in person, to those of you listening, and have a good day.
Thank you.